Vighnesh Shahane is joining us right here in the studio. Vignesh, good morning. Thanks so much for being with us.
Yep.
So first up, let's actually get a sense from you on what we should take away from the APE growth data. Are there signs that you feel are there of a slowdown in the space, or are we reading too much into just the first, it's just been a month or so that we started to see this trickle in?
I think I've always maintained that the last 1 or 2 months data on APE is a small blip on the radar. I think the insurance industry is well and truly on the growth trajectory path, especially post-demonetization. And the reason I say this is the following. Although APE shows a muted growth, whichever way you slice and dice, what you should realize is that a lot of big insurance companies, including the LIC, has been concentrating on single premium annuity plans for the last 3 or 4 months, or the last 5 months. So if you see the total individual premium, where APE, the single premium is rated by 10%, if you take it 100%, it's actually grown by 20 or 22%, YTD September. Single premium has shown a growth of 40%. So there's a lot of focus on annuity plans, and that is one reason why probably the APE growth looks muted. But there are other reasons. I've mentioned before that the volatility in the stock markets has a play in this. And one thing you can't ignore is the base effect. As business keeps going up every year, the rate of growth is possibly going to slow down. But the base is increasing, the pie is increasing. One important thing that a lot of people forget is that insurance companies, the entire industry, has one eye on the bottom line today. It's not like it's a top line race. So if you see the efforts of insurance companies to increase protection products are very, very profitable, but they have a small ticket size, so they don't impact the top line very significantly.
Sure.
So there's an effort to get protection products. The persistency of the industry has increased over the last 2-3 years across all 5 buckets, and it's really shown a great increase. Insurers are getting more cost conscious. The OPEX ratios of insurance companies in the industry on the whole is improving.
Okay.
The complaints ratio is coming down. So I feel that the insurance industry is in a great place, is in great shape as of now.
Sure. Okay. Just also want to bring on board Avinash Singh, Senior Analyst, Insurance and NBFCs at SBICap Securities. Avinash, hi, morning. Within the private space, mid-sized insurers clearly are seeing better growth as opposed to the bigger players. How exactly do you see this trend emerging? And do you think it's the mid which will become larger, whereas the largest in the pie would shrink from here onwards?
Yeah, morning. Yes, so 2 things. I mean, one should not get carried away by every monthly data, because there is bound to be volatility as well as some seasonality factor, and nevertheless the impact on certain products from the market, what is happening in the broader financial markets. However, within that space, if you see, I mean, just looking at the cumulative, like first half year, if you see, most of the private players are the larger private players which has got a strong banker distribution are still showing reasonable growth. The only place where, despite being a good banker, the growth is still struggling is ICICI Prudential. But there also you have to bear in mind that management has sort of reiterated its plan. It's more sort of focusing towards protection product, and the target is more on profitability, not on a top line growth. So as of now, if you see the growth at the larger private players, there is no signs of worry. I mean, you cannot assume that if the growth has been the 30 or 40% for a couple of months, that cannot be the trend. So if in the first half, be it SDFC Life or SBI Life or Max, all have grown 20% plus. So I mean, that's still a healthy growth on that larger base.
Consensus does seem to be that growth is continuing, but let's just talk about whether or not you see more private players eating into the pie with regards to life insurance, like you're talking about, perhaps more consolidation in that space. Is that the segment that you see perhaps leading the way for growth going forward?
Yeah, private players it will take time before they can actually eat into LIC market share, but they've been doing a lot of things consistently over a period of time, and the thrust on digitalization, superior products, more channels of distribution.
Sure.
I think customer service. I think they have to do all these things over a period of time consistently if they need to start eating into the share of the monopolistic supply in the country today.
Okay. Avinash, in terms of, particularly for the September data, and yes, you said you're positive going forward, but are there particular players that you're tracking, in terms of valuations or otherwise? Can you explain why perhaps some of this data is important in predicting the trends that as you see it going forward as well?
Yes, I mean, September definitely sort of shows some sign of moderation in growth, and that means that, okay, if the valuation, if you see so far in calendar 2019, insurance has been one of the outstanding sectors with most of the listed names, the bank-led names have sort of outperformed the broader market anywhere between 30 to 50%. So that's a very strong performance. And right now the easy money is gone, and the valuation is definitely not as cheap. The valuation have become sort of the premium multiple has come into play. And if some part of that has been built around the strong growth in the new business premium seen in the first quarter of this financial year, then definitely there could be some moderation. However, you also have to look at the factor as the gentleman pointed out that that insurers no longer are just focusing on the top line, because top line is, yes, it's a good way to get market share and visibility and the size, but eventual end game is the bottom line, and that is where if you see most of these private players have started focusing more on protection product that is profitable, and also addressing the cost OPEX structure to bring in profitability. So on that front, as of now, if you see somewhere closed, VNB growth of 20% plus and an operating return on embedded value in the range of 20% is something what most of these private players, the listed ones, should achieve. So as of now, valuations seems to be not under risk. However, if again this outperformance by the shares have been more of a, if at all, result of the strong growth seen in the first quarter, then there could be some bit of correction, because that first quarter growth that the sector this year is very difficult to just sustain over the long term. Over the medium term, you can expect that for the private players as a whole, the APE growth should be somewhere between 15 to 20%.
Also, Vignesh was wondering, because in our last interaction, I recall that you mentioned that trust deficit is a very key factor when it comes to insurance. What steps are you expecting from the IRDA to ensure that, deeper trust actually builds in within networks?
I think over the last 5 or 6 years, every regulation by the IRDA is towards making the industry more customer-centric and getting back the trust of the customer. Plus, the various Prime Minister schemes which you've seen have increased a lot of awareness and penetration of the product. So I think these two are laudable efforts, and they'll only help benefiting the industry.
Okay, in terms of plans for you as well, I think in terms of IDBI is looking to offload some stake from the company, while Federal Bank has increased its holding in the insurance arm. So how does that impact your tie-up on both sides?
No, as of now, IDBI has been wanting to sell its stake for the last 2 years.
Sure.
Then LIC stepped in with the controlling stake, and then the need for capital was deferred.
Yeah.
But Federal Bank and Aegis, that is our foreign partner, have a 26% stake each. They haven't increased it. So the sale, the process is on. We'll have to see how it plays out.
Okay. So we always talk to you about, how perhaps one can expand the market, distribution channels, so on and so forth. We're always discussing that with you in terms of increasing the overall pie for some of the newer players. Given all the steps that one is taking and the kind of growth momentum you're seeing, what is your outlook then for H2?
Very positive. I'm saying it's very positive. I think the insurance industry is well and truly on the growth trajectory.
Okay.
You see an improvement. And again, I'm saying improvement in bottom line parameters and top line parameters. So they have to be looked at holistically.
Sure.
And I think it's never been in better shape. So my outlook on top line and bottom line is very bullish and very positive.
Awesome. Thank you so much for
Thank you.
joining us, both
Thank
of
you.
you,
Pleasure.
and sharing with us, very positive commentary coming in when it comes to insurance. So despite any short blip in the September numbers, clearly the outlook remains incredibly positive.